Hey, thanks very much. Welcome back. Kirk Conover has just left the building, ladies and gentlemen. Woo! Come on, Chuck, clap for Kirk. Woo! Ladies and gentlemen, we have a lot to do for the next 45 minutes. Chuck Malamut is here. He is in the midst of his 26th year with us here on the Hurley in the Morning program as our official financial advisor. Chuck leads the Malamut Group at Morgan Stanley's Northfield office, 609-383-2010. The following program that you are about to enjoy is presented by Chuck Malamut from Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast and are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley, Smith Barney, member SIPC. Chuck, good morning.
Good morning, Harry.
Chuck, I know you have a very important list of items, but I want to bring two local things up real quick. One is, and we broke this yesterday on Twitter, first, I believe, but if not first, early in the food chain, the Atlantic City municipal bonds have been downgraded to CCC minus. Not good news, Chuck.
No, Harry, actually, I was looking at the end of last week, bid one bond in particular that was Atlantic City GO. I wish I remembered the actual maturity date. It wasn't long. It wasn't a long dated bond. It was relatively on the more short to intermediate term, maybe 21, 23, 24 maturity, maybe somewhere like that. And the bond up until last week was priced on a dollar price in the 80s, in the low 80s. After everything that came out with all the rhetoric with the state and the city and who takes over and all the political shenanigans, I guess is what I'll describe it as, bond was downgraded, as you noted, and the bond was then priced in the low 70 levels if you could, in fact, sell it. So it's one thing to price a bond, it's two to be able to make a mark, and three be able to sell it. So, the concern that any investor would have at this point in time is the lack of liquidity, because when very, very similar to stocks, there's only a finite supply out there, but you have to have a buyer to match seller. And that indication to me was not only did you get the downgrade, but I don't think anyone who was at that time, a professional bond buyer was actually looking to buy that piece of paper. So
now, Chuck, I looked at the definition of what this means. Depending on whose definition you either like the most or believe the most, it's either one that is of the lowest rating, typically in default with little prospect for recovery of principal or interest. This one I prefer more than the one I just read. I think it's more accurate, and it was literally the definition next to a CCC minus type of reality. And it says currently vulnerable and is dependent upon favorable business, financial, and economic conditions to meet its financial commitments. Well, that's a problem, because I agree with that one. That is what this is, but we don't have a favorable business, financial, and economic condition at the moment.
No, Harry, we don't. And unfortunately, I think what concerns me the most, and maybe just looking at sort of as I don't want to consider myself an outsider, certainly, but someone that's not involved in the day-to-day political, what's the word I'm thinking of? The political. I don't want to use the word shenanigans. It's not a good word, but looking
political events.
Thank you. What goes on day to day between the city and the state? Now, what I'm seeing here, Harry, is a big effort for the city to try to ward off the state, which I'm not quite certain they're going to be terribly successful at doing. To me, I would rather, and again, maybe call me naive when I make this statement, but wouldn't it be nice if everybody can play politely in the same sandbox? And I'm not seeing that happen for obviously a lot of different reasons. So, putting that aside, it looks as if the revenues have somewhat stabilized here. In the city, it's been relatively calm. We're not getting those big double-digit down month-over-month comps.
What about the fact that they have no money as of April?
Well, that's the problem. I mean, you have
just figure I get to the punchline.
You have and again, I don't like to make the show political, but I mean, I just found it. I was very intrigued, Harry, as we were all sitting home in the snow, how our governor at the last minute decided he's going to come back home. And I think it was more of a staged event to help him politically, hopefully capture more votes up in New Hampshire.
Well, we're going to have a split decision on that. I'm going to tell you why. If he didn't come home, he would have got crushed. He came home, he gets crushed. He gets crushed on the perception of coming home because it's political. If he doesn't come home, it's even worse. And then he comes home, and then he leaves after he believes that his team has everything well in hand, and he's getting crushed today. So, I know you're a very fair man, and I try to be a very fair man. There's no good options right now when they crush you no matter what you do.
Well, his political capital, I guess the best way to call it, has certainly diminished fairly significantly over the last 6 months.
But he is running for president, so that places him in the early states in particular to have an opportunity, if he can have a breakthrough, to continue in the race long term. But then you have a significant winter event here at home, a storm event, and so he comes home for that. Just in fairness, if he didn't come home, he'd be criticized. If he comes home, he's criticized. I don't know how you win.
Well, I guess what will happen is in a relatively short period of time, a determination is going to be made not only with him but the others, what I'll call the outliers, because they're going to either run out of steam, so to speak, and run out of capital, and the field has to be narrowed to take on the other party, so to speak.
And it will. It always does work that way. Here, Chuck, here is another, I think, sort of case study and it's a financial matter. And we put this up on Facebook really before I saw anybody else have it yesterday, and hundreds of people have responded. And that is the fact that Tony's Baltimore Grill has filed for bankruptcy protection. This is a business that's been in its current location for 50 years, since 1966. Same food. Everybody loves that. A lot of times people want things to change. I never wanted Tony's to change. I think everybody that loves Tony's loves that it's the same pizza, cheese ravioli, meatballs, spaghetti, the seafood platter. People love the menu and don't want it to change. And yet they're now in a position where what they've been doing for well more than a half a century is now at the point where they need reorganization in order to be able to continue. And then I put that in the specter, Chuck, of if 2 to 4 more casinos in Atlantic City close. This, to me, if a place that's been there for generations is having issues right now, I think there's something to be said for my example.
Harry, I saw the headline yesterday, and I read very, very quickly. And again, I don't have enough information to really give you a fair and valid opinion as to what happened over at Tony's. I mean, and as you mentioned, you and Margie spent a lot of time in there. I did as well. Looking, I guess, for the future, Mrs. Malamut, I guess we'll call it, but at a very, very young age, so that never really materialized.
But there was, full disclosure, ladies and gentlemen, there was nothing like when Chuck's very dear, dear, dear friend, like a brother from another mother, was the head hotel honcho. That wasn't too shabby.
No. But what I'm saying,
I know. I can't resist.
I get it, Harry. But
Chuck,
but
Chuck didn't want to celebrate that, guys.
But here's what I found interesting about Tony's, and I need to really understand a little bit more. Typically when a company files, the assets and the liabilities far outshadow the assets. The liabilities are significantly higher. Now, when I read this, what I saw,
but it's unfunded pension liability.
Okay,
and so
that's what this gets down to.
Yes, and
all right.
Without that, they're fine, is what I believe.
What was the amount of the pension liability wasn't funded?
I want to say it's about $750,000. So out of 800 and some thousand, they have like 800 and some, near 900,000 liabilities, little over $1 million in assets. But it is basically 3/4 of the liability at least is unfunded pension liability. So what I put in my post was while it initially sounds like horrifically bad news, this could be good news because they could emerge, stronger from it with less debt. And I don't think it's a problem of operations. I think it literally was a payroll issue, was a pension issue.
Well, obviously they didn't have a lot of capital then. If when you look at the debt to equity ratio, and it being that very close, so you're kind of living on the edge, so to speak. You're from I guess, for lack of a better word, paycheck to paycheck.
By the way, I think it's pretty awesome that for their entire history that I know of, they have always employed Local 54 food and beverage.
Yeah, and actually they probably could have.
It's very unusual for a boutique operation that size.
Well, so look, they, obviously an Atlantic City landmark. That we want to certainly see survive.
Because the irony here is, I don't remember the prices. Friends of mine do, and I'm talking to one of them right now privately, digitally. We'd absolutely know this number, but they were offered, if I'm not mistaken, at different times. Tropicana offered like $20 million. Because obviously Tropicana is a beautiful thing if they could come all the way out
to the street,
to Atlantic Avenue. But Tony's, solid, and I never looked at it like Francis Giannetti in your era or some of the other people that held out that could have become multi-millionaires. They wanted to continue. They didn't want to sell their business or their location. But it's kind of ironic. Tens of millions now turn into maybe net upside, maybe 100,000.
Yeah, so the question, Harry, is, will they get the necessary relief to be able to continue to operate? And
I would say, why wouldn't they?
This
is not an outfit that's ever been egregious and looking to just, do things they don't really need. I don't see how they won't get relief.
I certainly hope so. I mean, we were there not too long, I say within the last 2-3 months, actually. And as you
I
mentioned,
had cheese ravioli and meatballs 2 days ago, baby, before I even knew this was coming.
And as you mentioned, the menu seems to be pretty much the same, year after year,
same menu,
decade after
looks
decade.
The same. The booths look the same. The little jukebox on your wall looks the same. The servers are the same, and it's very cool. I mean, it's just and when you have great memories of literally, besides Rocky II, where Margie and I were not officially dating, Tony's was the scene of the crime. I mean, that's where Margie and I would go on dates. I want to see it. I want to see that history be able to stay.
Yeah, it certainly would be nice. There's no doubt about that.
All right, brief time out. Chuck has a long list that we have to go through, and we will do it when we come back in just a few minutes. Chuck Malamut with yours truly, Early in the Morning, and a reminder for all of your financial planning needs, turn to the official financial advisor to the Early in the Morning program. Chuck has been our official financial advisor for 26 years, but also someone that I've known for well over 35 years. Chuck leads the Malamut Group at Morgan Stanley's Northfield office. To reach Chuck and his team, 609-383-2010, 609-383-2010.
Hey, wake up with Harry Hurley and drive home with me, Sean Hannity, 3 to 6. It's all happening here on WPG, Talk Radio 1450.
Thank you, Sean. I'm here with Brother Chuck Malamut, the official financial advisor to the Early in the Morning program. Reminder, you reach Chuck and his team at Morgan Stanley. Chuck leads his group, the Malamut Group, in Northfield, 609-383-2010. Chuck, China Central Bank tried something. Looks like it didn't work. I want to get your take on it. It does fit in with a lot of the points that you have on your list to do here on your program today. I just want to throw this out there for a starting point. The central bank in China tried to infuse 360 billion yuan. The Shanghai market was not impressed, dropped over 6%. I heard that European markets were not looking towards a good day, and I did see that our futures were down, but not sharply down, but were all down. So they're trying to increase liquidity. It looks like it didn't work.
No, Harry, look, the Hang Seng, or the Shanghai, I'm sorry.
It's okay.
Was off about 6.5% at the close yesterday as we were sleeping. As we were looking at European markets right now, there has been some stabilization there because when you look at the Far East, those markets were down anywhere from 2 to 6%. So you have the only exception was Australia, which was up about 1 3/4 for the day. Your European markets right now, Harry, are off anywhere from 1/2 to 3/4 of 1%. what we're seeing, in the U.S. And we don't like to talk about what goes on a day-to-day basis, but certainly with the amount of emotion that's in the markets right now and all the volatility, you have to focus on a lot of the current events, as we'll call it. So you had a number of companies report before the bell this morning, and most of which were ahead of expectations. Now, those expectations were lowered pretty significantly as we got towards the end of the last quarter, the fourth quarter of 2015. But DuPont this morning beat, Procter & Gamble beat, 3M beat. So what is happening right now, Harry? 30% of the S&P, including your favorite company, after the close tonight, reports, and that after the close is Apple, and all eyes are on earnings. The problem that the market is dealing with right now is the fact that we're looking at what transpired previously, not what they think is going to transpire in the upcoming 3 months, 6 months, in the upcoming year. So that is something that the market's got to deal with right now. The other factor that we are looking at, and Harry, if I asked you, would you ever believe that when you look at the equity markets as they trade, typically oil, there's about a 50% correlation to oil and the equity markets. That's traditional. Right now, it's 95% correlation. So as oil goes, so will the equity markets, as evidenced yesterday in a relatively muted day, so to speak, until we got to the very end, as oil was bouncing off the lows for the day and closed down about 6%. The equity markets basically rolled over at that point in time, down about 200 points. So, and that being in the Dow. So the gains that we put in place as we got to the end of the week, last week, basically were taken away from us yesterday. So you're going to continue with a lot of volatility. Investors, are I guess the best way to put it, Harry, they're sleeping with one eye open all the time now. They're very, very leery of what's happening next, and they seem to be looking for the next crisis. What's going to pop up next, and whether it's another geopolitical event, or they're just sitting back, or not sitting back. They're sitting on the edge of their seat, waiting for this next crisis, whatever it may be. And when you have that sort of pessimism in the market, and it does happen. And investors, investor psychology, investors have a tendency that they want to basically, bail. And we'll pick up the carnage and we'll look at it later. But
Chuck, how about the price of oil, which looked like it was creeping back up, but then it's ticking back down. And yesterday, when I last paid attention to it, when the markets closed, it was barely over 30 again.
Yeah, I mean, if you look at oil today, Harry, it is currently at $30.14, down 20 cents or 2/3 of 1%. Brent, 30.34, down 16 cents, and that's down about 1/2 of 1%. But when you get these pretty big moves, you end up down 5%, 6%, and what happens is, I mentioned to you before, when you have that that direct correlation of equities trading to oil, you're going to get the same thing that holds true in the equity markets. But I think don't be foolish here, because the one thing that I found very, very interesting is that oil a year ago, $46.50 a barrel. Currently at 32. The price at the pump a year ago, 207. We're now at 191. So the two do not, in fact, correlate.
Which we talk about a lot.
Yeah. So
the prices rise very quickly because of reasonable circumstances, but they lower very slowly based on what should be the same type of operating principle.
You know, the problem with oil is we all know the glut that's out there. There's just way too much supply and not enough demand.
Chuck, I did a piece last week in advance of your program where basically bottled water is more expensive than a gallon of gasoline.
Well, not only that, Harry,
it's incredible. Milk, you can get 2 gallons. You can get 2 gallons of gasoline for the price of 1 gallon of milk.
Well, you have the price of the cost of the barrel is itself is now more expensive than what you put in the barrel.
Oh, man!
So
I won't forget that. That's going to be in my shtick. Holy smokes! The barrel is more expensive than it's like a penny. It costs more to make a penny than a penny is worth.
But look, we will, as we've done in the past, we will see through this. There's no doubt about it. I think that the carnage is going to be out there with your
I'll tell you the shame of
second
it, though,
tier
Chuck,
type companies.
The shame of it is, though, with this billions and billions of dollars of additional discretionary spending that the American people have now, just saving on gasoline charges would be confidently spent if things were different.
You know, the savings average right now is pretty astronomical. It's at 5.6%. We have not seen those kind of numbers in a long time, and I think a lot of it is obviously pegged to what is happening in the economy. Am I going to remain employed? Am I going to remain gainfully employed, I guess is the better way to say it. I need to hold on to my capital, and I'm not likely to go out and spend it. And that was evidenced in what we saw over the holidays, and now it's working through into the first quarter of 2016. Companies are pretty resilient. When you carve out energy, what is going on here in this country, is relatively positive for the most part. As I mentioned to you a few minutes ago, Harry, we're starting to see the light at the end of the tunnel with these corporate earnings, and we need that stimulus, so to speak, and that stimulus not being QE, which would be has been talked about, but is likely not to happen here. We have a Fed meeting starting today with a conclusion tomorrow afternoon with a 2:15 p.m. discussion as to what they're going to do. We're all pretty much certain that they're not going to increase rates. I mean, there was some discussion earlier as we got into the beginning of 2016. One of the Fed presidents was looking at 4 hikes. Well, that has been pretty much taken off the table, and we're looking at anywhere probably from 1 to 2. And if it does happen, it won't happen until the summer or maybe the fall. But I think we're all looking for what the Fed's going to actually say, what their statement's going to be, because we know they're not going to make a move.
32 minutes past the hour. I agree with that completely. We're going to be right back. Brother Bill Malamut checking in. I did ask Bill, hey, Bill, can you please text me your usual great update with how amazing I'm doing in our entertainment-only football pool? I think it's interesting to note that for the first time this year, I won the week. I'm within 1 of winning the whole thing with only 1 game left and 2 different, for entertainment purposes only, wagers that can be done. That would be who would win the game with the point spread considered, and also whether the combined score of the 2 teams be over or under a certain number. And Chuck, your boy right here with 2 thumbs pointing at himself, is getting it done right now. Just 1 week to go. We'll be back. This is Hurley in the Morning, and Chuck Malamut, our official financial advisor to the Hurley in the Morning program, to reach Chuck and his team at Morgan Stanley's Northfield office, 609-383-2010. We're also brought to you by Harbor Pines Golf Club, the exclusive country club for the Hurley in the Morning program, located at 500 St. Andrews Drive in Egg Harbor Township, owned by the legendary Gerwicks family. You'll thoroughly enjoy working with General Manager Alan, Sales and Marketing Director Debbie, and their great team. The golf course itself is so upscale looking that you'll believe you are the member or playing at a closed member-only country club. It's attractive, but it's an available public golf course. It satisfies the most diverse, most discriminating golfing tastes. You'll see 5 sets of tees, large tee boxes, 17 acres of breathtaking water. You'll be able to enjoy each hole in undisturbed fashion. Distinctive and memorable bunkers are strategically placed to challenge your game, and they have excellent practice facilities as well. There's a wonderful Valentine's dinner that you have two opportunities. Valentine's Day itself on the 14th, but also the night before on Saturday the 13th to reserve. And it is wonderful for you and that special someone. Great value, wonderful multi-course meal, and the beautiful surroundings of Harbor Pines Golf Club. Make the call. Tell them I sent you early in the morning and dial 609-927-0006 to reserve for Valentine's dinner either the day before on the 13th or Valentine's Day itself on the 14th, and the number of seating times are available. 609-927-0006. I'm also pleased to report that the Harbor Pines Golf Club is now the official home of the 9th Annual Early in the Morning Golf Open, set for Friday, June 17th, 2016, 8 o'clock hour a.m. registration and breakfast, 9 o'clock a.m. shotgun start. And we'll have all the details up at harryhurley.com. It's been a little busy working 7 days a week lately. We'll have all the details up in the next week or so on our website, harryhurley.com. But it's very similar to what we've done in the past, and all the pricing details and everything. Still $1,000 for a Hurley's Hero contributor. Nothing has changed there. It's going to be a wonderful event at a beautiful, beautiful, wonderful country club, the Harbor Pines Golf Club. Join us on Friday, June 17th. We're always the third Friday in June. 8 o'clock breakfast, registration, 9 a.m. shotgun start. Back with Chuck in just a moment.
If you're talking about it, Harry Hurley's talking about it right now. Call 609-407-1450. Hurley in the morning on WPG Talk Radio 1450 and WPG1450.com.
Hey, thank you. Chuck Malamut is here. One more power segment straight ahead. We'll have a mini open forum segment. I know we've dropped a lot of calls this morning. It has just been so busy. And at 9 o'clock this morning, I'm going to be conducting an interview with WCBS for about 2 or 3 minutes right before we come back. If you checked out yesterday, we were on a very nice program on PHL 17 twice. We were on at 5:35 and at about 6:25 yesterday. We're going to be speaking with Wayne Cabot, who's a tremendous anchor at WCBS News Radio 880. We'll let you know. I'm recording it. It will not be a live hit. We're recording it. We'll let you know from Wayne if he tells us when it's going to air. Chuck, getting back to you, I know that your list I saw an article about the Fed. The Fed is starting to take some heat. I should have had that out, Chuck. Here it is. Financial Times, talk of Fed, quote, policy error grows. People are starting, I said it even, as a layperson, people are starting to believe that what the Fed did was wrong. I don't know.
Well, the discussion, Harry, is, when you look at, did the Fed have too much of the easy money, so to speak, out there for too long? And that's been a discussion that is being had now amongst a lot of economists. And so the world economy, as you look at it, we are at the end of that easy money, so to speak. I think there is still a little more room to go in Europe. I mean, Draghi last week, and one of the things you look at, what in fact inspired the market, there was, some positive comments that Mario Draghi said that further policy support could come, was pretty well received. As you mentioned, China over the weekend, provided some liquidity, and our Fed backed off as well. But I think that what all the economists are looking at is that we validate the current financial asset prices as we know them, and growth faster. And as I think you and Kirk kind of talked about the last hour, the fact that we have virtually no growth, and the growth that we have seen coming out of the recession has been muted at best, and I think a lot of that is now coming home, coming home to roost, so to speak, where, you can't grow at 1.5% to 2% and expect to gainfully employ a lot of the unemployed. And I think it's a very, very vicious circle that we are, basically running around, so to speak, on a day-to-day basis. So I think, Harry, I'm not going to be the one to throw cold water on this, but I mean, you and Kirk, I mean, everybody else has pretty much stated that the economy, as we know it, has not healed. Or let me rephrase that: the economy has somewhat healed, but has not gotten on the right track. Because, on a long-term basis, you can't continue, day in and day out, waiting for, that 3 to 4% growth. And quite frankly, unfortunately, Harry, the way the country is set right now, I don't think that's going to happen. I mean, you've had a lot of anxiety, as I mentioned, about the corporate sector, and particularly the oil and gas and the energy world. But for the most part, it feels to be, for the most part, relatively healthy. You have a lot of cash sitting on the sidelines. With the lower interest rates that were put in place for all these years, the interest rates that a lot of the loans and notes that are tied to these companies are relatively low. So the ratios are good. Net worths in a lot of these companies are pretty solid. So unless we have some sort of shock, such as a recession, which obviously has now been talked about more than it has in the last month, or, continually rapidly rising interest rates, the corporate sector seems to be relatively healthy. And if we can just get this economy unleashed, so to speak, and you know what that's all about and where it's coming from, you'll comment on it, I won't. But the fact that, if we can get the economy back where it needs to be, and I'm convinced we can get there. You've had all these years of just, operating with one hand tied behind your back. So we need to get, front and center and be able to operate, like we've been accustomed to. And I was very interested this morning listening to you and Kirk as you played some of your old clips. I mean, I just remember as a kid, Ronald Reagan. What a great time to be an American.
It's great.
It was just, you would.
Doesn't it show that the turnaround can happen quickly if you enact, putting all politics aside? This is not political in nature. If you enact the correct policies that will stimulate confidence, will stimulate spending, stimulate job growth, it's amazing how you literally, this is historically accurate, we went from malaise to literally, that was the president's term, to literally record job creation.
Yeah,
and by lowering taxes.
And, Harry, I think that when you look at it, it certainly can be done. There's no reason why we can't do it. So, and I think, as I mentioned a few minutes ago, the fact that there's so much cash sitting on the balance sheets of these companies, quite frankly, I guess for lack of better words, they're scared. They don't know what to do with it. They don't know when to enter the market. They don't, you continue to see these mergers and acquisitions, but not at the pace that they've been at, previously. But let me throw something out there before we go, because I found this to be very, very interesting. And you're a history buff, and you like to go back and look at what's happened and kind of compare. And I'm thinking that Kirk would really, really like to, chew on this for a little bit. If you look at last week, Harry, when we hit the low, and remember the market for the week was actually up about 1.5%, but it was a tough road to travel. I mean, we moved 1,000 points, but ultimately finished up about 1.5% for the week. At the low for the week, the S&P 500 was actually the yield, the dividends being paid out on companies in the S&P 500 was 47 basis points, or almost 0.5% higher than the 10-year Treasury yield. So if the 10-year is sitting at 2, the average yield on the S&P 500 companies, the average dividend, 2.5%, we'll call it. So if you go back to 1990, there have been 82 times where we've seen yield spreads of this magnitude or greater. Now, it seems like 82 times a lot of times, but think about it. From 1990 So we're talking about 26, 25 years, right?
Yep.
Harry, in each instance, the S&P 500 was higher 4 months later, and the average gain was just shy of 10%.
You know how I love this kind of stuff. And past is prologue, and I truly believe that. That is a very hopeful conclusion that you just shared.
Yeah, we have to kind of break away from that correlation, one to one oil to equity, so to speak, and we will. It's just a matter of time. So I think if what your listeners can take away from this is the fact that, Harry, you and I are firm believers in in our country, and truly believe the glass is half full, not half empty. If we can convince the rest of Wall Street that is the case, then I think, even though January typically makes the market for the year, hopefully this year will be different.
As always, Chuck, you bring it. Thank you so much.
Thanks for having me, Harry.
Yeah, man. Look forward to next time. You've been listening to Chuck Malamut, the following program presented by Chuck, a financial advisor at Morgan Stanley. The information, views, and opinions expressed today are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast. They're subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. And to reach Chuck, who is the managing director of his team, the Malamut Group, you reach them at 609-383-2010. That's 609-383-2010. Your phone calls are next. Don't go away. I'm Hurley in the Morning on WPG. Talk Radio 1450, South Jersey's talk station.